Hi, today we are going to learn about Sarbane-Oxley Act of 2002 in a summary. Commission rule and enforcement. A violation of the rule of the Public Company Accounting Oversight Board is treated as a violation of the 34 Act, giving rise to the same penalty that may be imposed for violation of the Act. Section 101 established the board membership. The board will have five financially literate members appointed for 5-year term. Two of the members must be or have been certified public accountant, and the remaining three must not be and cannot have been CPAs. The chair may be held by one of the CPA members, provided that he or she has not been engaged as practicing CPA for 5 years. The board member will serve on a full-time basis. No member may currently, I mean concurrent, will serve service on the board, share in any of the profit of or receive payment from a public accounting firm other than fixed continuing payment, such as retirement payment. Members of the board are appointed by the Commission after consultation with the Chairman of the Federal Reserve Board and the Secretary of the Treasury. Members may be removed by the Commission for good cause. Section 101, 102. Accounting firm must register with the board. And Section 103. Auditing, quality control, and independence standard and rule. The board shall register public accounting firm established and or adopt by rule, auditing, quality control, ethic, independence, and other standard relating to the preparation of audit report for issuer, conduct inspection of accounting firm, conduct investigation and disciplinary proceeding, and impose appropriate sanction. Perform some other duty or function as necessary or appropriate. Enforce compliance with the Act, the rule of the board, professional standard, and the security law relating to the preparation and issuance of audit report and the obligation and liability of accountant with respect thereto. Set the budget and manage the operation of the board and the staff of the board. Auditing standard. The board would be required to cooperate on an ongoing basis with designated professional group of accountants and any advisory group convened in connection with standard setting, and although the board can, to the extent that it's determined appropriate, adopt standard proposed by those groups. The board will have authority to amend, modify, repeal, and reject any standard suggested by the group. The board must report on its standard setting activity to the Commission on the annual basis. The board must require registered public accounting firm to prepare and maintain for a period for not less than 7 years audit work paper and other information related to any audit report in sufficient detail to support the conclusion reached in sub-report. The board might require a second partner review and approval of audit report. Registered accounting firm must adopt quality control standard. The board must adopt an audit standard to implement the internal control review required by Section 404. This standard must require the auditor evaluate whether the internal control structure and procedure include record that accurately and fairly reflect the transaction of the issuer, provide reasonable assurance that the transactions are recorded in a manner that will permit the preparation of financial statement in accordance with GAAP, and a description of any material weaknesses in the internal control. Section 104, inspection of registered public accounting firm. Annual quality reviews inspection must be conducted for firms that audit more than 100 issuers, or other must be conducted every 3 years. The SEC and or the board may order a special inspection of any firm at any time. Section 105, investigation and disciplinary proceeding. All document and information prepared or received by the board shall be confidential and privileged as an evidentiary matter, and shall not be subject to civil discovery or other legal process. In any proceeding in any federal or state court or administrative agency, unless and until presented in connection with a public proceeding or otherwise released in connection with a disciplinary action. However, all such documents and information can be made available to the SEC, the U.S. Attorney General, and other federal and appropriate state agency. Disciplinary hearing will be closed unless the board ordered that they be public for good cause and with the consent of the parties. Sanction can be imposed by the board of the firm if any fail to reasonably supervise any associated person with regard to auditing and or quality control standard or otherwise. No sanction report will be made available to the public unless and until stay pending appeal have been lifted. Section 201, service outside the scope of practice of auditor. Prohibited activity. It shall be unlawful for a registered public accounting firm to provide any non-audit service to an issuer contemporaneously with the audit, including bookkeeping or other services related to the accounting record and or financial statement of the audit client. Financial information system design and implementation, appraisal or valuation service fairness opinion or contribution in kind report, actuarial service, internal audit outsourcing services, management function or human resource, broker or dealer, investment advisor or investment banking services, legal service and expert service unrelated to the audit. Any other service that the board determined by regulation is impermissible. The board may, on a case-by-case basis, exempt from these prohibitions any person, issuer, public accounting firm, or transaction subject to review by the Commission. It will not be unlawful to provide other non-audit services if they are pre-approved by the Audit Committee in the following manner. The bill allows an accounting firm to engage in any non-audit service, including tax services, that is not listed above, only if the activity is pre-approved by the Audit Committee of the issuer. The Audit Committee will disclose to investors in the periodic report its decision to pre-approve non-audit service. Statutory, insurance company, regulatory audit are treated as an audit service and thus don't require pre-approval. The pre-approval requirement is weighed with respect to the provision of non-audit service for an issuer if the aggregate amount of all of non-audit services provided to an issuer constitutes less than 5% of the total amount of revenue paid by the issuer to the auditor. This can be calculated on the basis of revenue paid by the issuer during the fiscal year when the non-auditor services are performed. Such services were not recognized by the issuer at the time of the engagement to be non-audit services, and such services are promptly brought to the attention of the Audit Committee and approved prior to completion of the audit. The authority to pre-approve service can be delegated to one or more members of the Audit Committee, but any decision by the delegate must be presented to the full Audit Committee. Section 203, Audit Partner Rotation. The lead audit or coordinating partner and the reviewing partner must rotate of the audit every 5 years. Section 204, Auditor Report to Audit Committee. The accounting firm must report to the audit committee or critical accounting policy and practices to be used and or alternative treatment of financial information within GAAP that have been discussed with management and ramification of the use of such alternative disclosure and treatment, and the treatment preferred by the firm. Section 206 Conflict of Interest. The CEO, Controller, CFO, Chief Accounting Officer, or person in an equivalent position cannot have been employed by the company audit firm during the 1 year period preceding the audit. Section 207 Study of mandatory rotation of registered public accountant. The GOA will do a study on the potential effect of requiring the mandatory rotation of audit firm, which updated the GO state in 2007 that now is not the time to implement this rule. The Act needs time to be understood and whether existing rules are meeting desired goal. And in Section 301, Public Company Audit Committee. Each member of the Audit Committee shall be a member of the Board of Directors of the issuer and shall otherwise be independent. Independent also means is defined as not receiving other than for service on the board any consulting, advisory, or other compensatory fee from the issuer, and as not being an affiliated person of the issuer or any subsidiary thereof. The SEC may make exemption for certain individuals on a case-by-case basis. The audit committee of the issuer shall be directly responsible for the appointment, compensation, and oversight of the work of any registered public accounting firm employed by that issuer. The audit committee shall establish procedure for that receipt, retention, and treatment of complaint received by the issuer regarding accounting, internal control, and auditing. Each audit committee shall have the authority to engage independent consultants or other advisor as is determined necessary to carry out its duty. Each issuer shall provide appropriate funding to the audit committee. Section 302 Corporate responsibility for financial report. The CEO and CFO of each issuer shall prepare a statement to accompany the audit report to certify the appropriateness of the financial statement and disclosure contained in the periodic report, and that those financial statement and disclosure fairly present in all material respect the operation and financial condition of the issuer. A violation of this sanction must be knowing and intentional to give rise to liability. Section 303. Improper influence on conduct of audit. It shall be unlawful for any officer or director of an issuer to make any action to fraudulently influence, coerce, manipulate, or mislead any audit, engage in the performance of the audit for the purpose of rendering the financial statement materially misleading. Section 304. For future of certain bonuses and profits. If restatement is the result of misconduct and for amount received within a 12 months following issuance of financial statement. Section 306. Insider trade during pension fund blackout periods prohibit the purchase or sale of stock by officer and director and other insider during blackout period. Any profits resulting from sale in violation of this section shall inure to and be recoverable by the issuer. If the issuer failed to bring suit or prosecute diligently, a suit to recover such profits may be instituted by the owner of any security of the issuer. Section 307. Rule of professional responsibility for attorney. Must report infraction to CEO or chief counsel. If not action, then the board of directors of the later reporting. Section 401. Disclosure in a periodic report. Disclosure required. Each financial report that is required to be prepared in accordance with GAAP shall reflect all material correcting adjustments that have been identified by the registered accounting firm. Each annual and quarterly financial report shall disclose all material off-balance sheet transactions and other relationship with unconsolidated entity that may have material current or future effect on the financial condition of the issuer. The SEC shall issue rule providing that pro forma financial information must be presented so as not to contain an untrue statement or omit to state a material fact necessary in order to make the pro forma financial information not misleading. Section 4.1c. Study and report on special purpose entity. SEC shall study of balance sheet disclosure to determine a extent of off-balance sheet transaction, which include assets, liability, leases, losses, and the use of the special purpose entity, and b Whether generally accepted accounting rule result in financial statement of issuer reflecting the economy of such a balance sheet transaction. 2. Investor in the transaction transparency reflection and make a report contain recommendation to Congress. Section 42A Prohibition on personal loan to executive. Generally, it will be unlawful for an issuer to extend credit to any director or executive officer. Consumer credit company may make home improvement and consumer credit loan and issue credit card to its director and executive officer if it is done in an ordinary course of business on the same term and condition made to the general public. Section 4.3 Disclosure of transaction involving management and principal stockholder. Director, officer, and 10% owner must report designated transaction by the end of the second business day following the day on which the transaction was executed. Section 4.4 Management Assessment of Internal Control. Require each annual report of an issuer to contain an internal control report, which shall state the responsibility of management for establishing and maintaining an adequate internal control structure and procedure for financial report and contain an assessment as of the end of the issuer fiscal year of the effectiveness of the internal control structure and procedure of the issuer for financial reporting. Each issuer auditor should attest to and report on the assessment made by the management of the issuer. An attestation made under this section shall be in accordance with standard for attestation engagement issuer or adopted by the board. An attestation engagement shall not be the subject of a separate engagement. The language in the report of the committee which accompany the bill to explain the legislative intent state. The committee does not intend that the auditor evaluation be the subject of the separate engagement or the basis for increased charge or fee. The Act directs the SEC to require each issuer to disclose whether it has adopted a code of ethics for its senior financial officer and the contents of the code. Direct the SEC to revise its regulation concerning prompt disclosure on the Form 8K to require immediate disclosure of any change in or waiver of an issuer code of ethics. Section 4.6 Code of ethics for senior officer. Company must disclose if it has adopted a code of ethics for a senior officer. Section 47. Disclose of audit committee financial expert. The SEC shall issue rule to require issuer to disclose whether at least one member of its audit committee is a financial expert. Section 49. Real-time disclosure. Issuer must disclose information on material change in the financial condition or operation of the issuer on a rapid and current basis. Section 601. SEC Resource and Authority. SEC appropriation for 2003 are increased to $776 million. $98 million of the funds shall be used to hire an additional 200 employees to provide enhanced oversight of auditor and audit service required by the federal security law. Title 8. Corporate and Criminal Fraud Accountability Act of 2002 is the felony to knowingly destroy or create document to impede, obstruct, or influence any existing or contemplated federal investigation. Auditors are required to maintain or audit or review work paper for 5 years. The status of limitation on the security fraud claim is extended to the earlier of 5 years from the fraud, or 2 years after the fraud was discovered, from 3 years and 1 year respectively. Employees of issuer and accounting firm are extended whistleblower protection that would prohibit the employer from taking certain action against employees who lawfully disclose private employee information to among other parties in judicial proceeding involving a fraud claim. Whistleblowers are also granted a remedy of special damage and attorney fee. A new claim for security fraud that has penalty of fine and up to 10 years imprisonment. Title 9. White collar crime penalty enhancement. Maximum penalty for mail and wire fraud increased from 5 to 10 years. Create a claim for tampering with a record or otherwise impeding any official proceeding. SEC given authority to seek court fees of extraordinary payment to director, office, partner, controlling person, agent of employee. U.S. uh, U.S. Sentencing Commission to review sentencing guideline for security and accounting fraud. The SEC may prohibit anyone convicted of security fraud from being an officer or director of any publicly traded company. Financial statement filed with the SEC must be certified by the CEO or CFO. The certification must state that the financial statement and disclosure fully comply with the provision of the Security Exchange Act and that they fairly present, in all material respect, the operation and financial condition of the issuer. Maximum penalty for willful and knowing violation of this section of a fine of not more than 500,000 and or imprisonment of up to 5 years. Section 1105 FCC authority to prohibit person from serving as officer or director. The SEC may prohibit a person from serving as an officer or director of a public company if the person has committed security fraud. And this all about the summary for the Sarbane Oxley. Yeah, up to 2002.